Have you been watching the US stock market closely, trying to decipher what Trump's every move means, and guessing if the Fed will cut rates this month? Well, nothing has been set in stone yet, but this much is true. The next chair in line has probably already determined the entire outlook for the US stock market and its next steps for the next 12 months. The frontrunner, Kevin Hassett, who's closely tied to the Trump administration, has a high-stakes 72% chance of being nominated, and could unleash a massive rally in US stocks, potentially pushing them to all-time highs. How am I so sure? Well, doesn't the Federal Reserve only look at cold, hard data when making policy? In this video, we'll explain why a changing of the guard makes us so bullish on the stock market. What's the big secret here? And is there any chance the market might take a massive hit during this transition? Pass up on this video and you might just miss the boat on the next big run to a new record. Let's start with the top frontrunner, Kevin Hassett, who, as of December 1st, has a high 72% chance of being nominated, and look at his core ideas. Hassett is one of President Trump's core inner circle guys. He boldly said he would be cutting rates if he were in Jerome Powell's shoes, claiming that the data shows we should. Now, a lot of folks think the Fed just sets policy based purely on the numbers, right? Inflation goes up, they hike. Unemployment rises, they cut. They think the new chairman's identity isn't a big deal. But here's the thing, the Fed chair's personal philosophy is actually one of the most crucial drivers of Fed policy. The first reason being that the Fed doesn't just look at published historical data. They have to predict the future trajectory of the economy. And when you're playing the guessing game, of course the new chairman's views matter. Second, during stagflation, the Fed often gets stuck between a rock and a hard place, and the chair is the one who has to make the final call on monetary policy. So, whether the new chair is a dove, meaning pro-cut, or a hawk, meaning pro-hike, this is absolutely key to knowing where US policy is headed. Hassett believes the US economy right now is powered by supply-side growth, which means the total supply on the market is currently outstripping demand. Therefore, cutting rates to boost domestic demand will both lift the economy and avoid putting too much pressure on inflation. He has also previously slammed Powell's policies as way too conservative. Hassett has publicly stated he wants a cumulative rate cut of 1 to 1.5 percentage points within the next year, and he even suggested single cuts could be larger than the standard 25 basis points. This is totally in line with the massive rate cuts that Trump has been calling for. If Hassett takes the job and keeps his promise, the Fed's benchmark rate would land somewhere between 2.5% and 3% within a year. How big of an impact would that kind of aggressive cutting have on the stock market? Historically, there have been 3 classic preventative rate cut cycles, and the average scale of those cuts was 75 basis points. Hassett's planned cut is way more aggressive than anything history has shown. In the past, whenever the central bank deployed a preventative cut cycle, the new flow of easy money always managed to overpower the negative effects of any economic slowdown. This results in a straight-up push in the US stock market. So, if Hassett wins, combined with the current US economy already being quite resilient, if he rolls out an aggressive preventative cut, US stocks will get sustained fuel for a powerful, continuous rally. So, we project that over the next 12 months, the US stock market will likely hit new all-time highs again and again. But what about the other 2 candidates, especially the hawkish one? If they win, what would their proposed rate cuts look like? First up is the moderately dovish Christopher Waller, who the market predicts has a 12% chance of being elected. Waller is a current Fed governor, so he's got experience. Like Hassett, he's a dove, but he's much more restrained. His stance is that we should cut rates, but we need to take it slow and steady, with 25 basis points at a time. If he takes the chair, we estimate a 75 basis point cut over the next 12 months, which would still give the stock market a healthy boost. On the other hand, the rep for the hawkish camp is Kevin Warsh. He's currently ranked 3rd in market popularity with an 11% chance of winning. He used to be a Fed governor and is now a fellow at the Hoover Institution. Ever since the financial crisis, he's been super worried about inflation making a comeback. He believes they should tighten up policy early to crush inflation. In 2009, he said that the risk of inflation spiking up is much greater than it falling, and voted against the second round of quantitative easing in 2010. Although he has supported rate cuts this year, he fundamentally opposes the government spending recklessly and printing money, believing that is the real root of inflation. If Warsh gets the job, things change dramatically. Market expectations for Fed rate cuts would immediately soften, and that would be major bad news for US stocks. So, out of these three guys, who do you think will ultimately take the chair? And how will their policies impact the stock market going forward? Let me know in the comments down below. To sum it all up, we project the rate cut expectations for these three candidates are as follows. Hassett is advocating for a huge cut of 100 to 150 basis points. Waller is a steady 75 basis points. And if the hawkish Warsh wins, the market's cut expectations would drop to a minimal 25 to 50 basis points. But the betting markets at Polymarket have already written the script for us. The odds of a dove taking the chair are now sitting directly over 80%. The current US economy is already solid, and when you combine that with an 80+% chance of continued monetary easing, the US stock market is highly likely to keep rallying over the next 12 months, which is why we remain strongly bullish. Alright, and that wraps up the relationship between the new Fed chair and US stocks performance. If you found this video useful and want to see more, consider subscribing to our channel and hit that like button. Make sure you click on that notification bell to be informed when we post more insightful takes. See you in the next one.